Hey everyone, me Kevin here. I have some concerns for Tesla stock. In this video, I'm going to incorporate my thoughts on Battery Day and how Battery Day affects the future stock value of Tesla. So to be clear, this is going to be a video about money. It's not going to be a video about chemistry or super technical stuff. And while I appreciate that stuff, I care right now about bottom lines and profit. I want money for you and I want money for me, which is exactly why I encourage you get your free stock with Webull, so you can get up to $1,600 completely for free when you deposit $100 with the stock trading platform Webull. And that, of course, is right next to the link to get life insurance, which you can Apple and Android pay for in as little as 5 minutes. So here's the outline of this video. Number one, I'm going to talk about what we didn't hear. I'm going to keep that very brief. Then I'm going to talk very briefly about some bottom line takeaways that we need to sort of reiterate so that we can look at our stock analysis and understand how does this affect the future value of Tesla? What does this mean for Tesla in 2022? What are my concerns and what does this mean going forward? Let's get into it. First, here's what we did not hear. We did not hear anything about a million-mile battery. This was definitely a disappointment due to massive hype over a million-mile battery coming. Vehicle-to-grid charging. No mention of this. The Tesla Roadster, nothing yet. Ride-hailing updates, nothing yet. And we weren't really expecting this, but no Tesla plane yet. Now, of course, some of these were a long shot, but here is what we actually got. And then we'll talk about the stock price and whether or not we should buy or sell in just a moment. First, we might see a beta to Tesla's full self-driving, where it stops for stop signs, red lights, turns left on intersections, turns right in intersections, handles roundabouts, all of that, released as soon as next month. This means we could literally go from home to work or wherever we're going, since some of us are now working at home, and back without touching the wheel. Technically, at least, since still not sure if that'll be legal, but anyway. This gives Tesla 2 full years to test their full self-driving capabilities, and then eventually destroy the car market with a $25,000 car to essentially take all of the market share away from the Toyota Camry sector, and probably the entry-level Prius section or the Honda Accord section. There's gonna be a lot of pain for some of these manufacturers. This $25,000 car, we heard, might be coming as soon as 2023. This is expected to have a mile range or battery pack range of somewhere between 250 to 300 miles. It's not expected to have a massive enhanced range like some of the higher end vehicles that Tesla has. And we're likely to see an additional autopilot charge, if people want to take advantage of that autopilot feature, of around $8,000 to $10,000. This means realistically, all in, you'll be somewhere around 30 to mid 30s for this car. $30,000, that is. And then you'd have a fully electric, fully self-driving vehicle for a very reasonable price. We also heard of a phase 2 expansion at GigaShanghai, meaning GigaShanghai, rather than producing the 500,000 vehicles that we thought it was going to produce, it's actually going to produce twice as many vehicles as we thought. This is actually huge. This is double what we expected, and it's really going to play into our numbers here in a moment. Then, obviously, Battery Day. We heard of a 56% reduction in the cost of batteries. That's all I'm going to say about batteries, because this means a $7,000 battery pack in a Model 3 could essentially cost half of what it does now. It currently costs somewhere around $7,000, so if I'm conservative and go with half instead of 56%, that means the battery pack would save around $3,500. This is potentially an additional $3,500 profit per vehicle, since instead of likely reducing the cost of the Model 3, Tesla's just gonna come out with maybe a Model 2 or that cheaper $25,000 car. This could easily add 2 to 4% in profit margin for Tesla's vehicles. And that actually helps get us to that 29 to 30% gross profit margin that Elon Musk thinks we can get. You sell $100,000 in cars, boom, $30,000 goes towards operating and eventually the bottom line. Not bad. But we're at least 12 to 18 months away from having the factories running to be able to produce these batteries. In fact, we're expecting Giga Berlin and Giga Austin to be the first to really mass manufacture these batteries on their new Roadrunner production lines. So we're really talking about 2022, 2023 here to actually get these new batteries up to scale. In fact, right now, Elon Musk even kind of laughingly says, yeah, we haven't really gotten all the kinks out yet. Yeah, why are we announcing it this early? Anyway, This is likely, obviously, what's going to help keep the cost of the $25,000 car down and increase profit for the rest of Tesla's products, including their battery packs and their other vehicles. Also, we'll have performance upgrades, speed upgrades, and all of the other beautiful things that come with better batteries. After all, Elon is now also not only vertically integrating battery production into Tesla, basically kind of giving the big warning sign to Panasonic that you guys are getting the boot soon, but he's also building these batteries directly into the structure of the future vehicles, meaning batteries have to be produced at each Tesla factory, which is a big roadblock for actually creating these production facilities. But once they're up and running, you now eliminate massive transportation costs to move heavy batteries around the world just to produce vehicles. And we also now eliminate unnecessary parts since the batteries will be used as part of the structural element of the car. Somehow, all of these cost-saving measures will actually make the car more comfortable to drive and more lightweight. We also heard that we have about 600,000 Cybertruck pre-orders, and Austin's gigafactory is expected to produce around 300,000 Cybertrucks per year. So we've got about 2 years worth of Cybertruck production already in pre-orders. We then heard about Tesla's plan to monetize higher-end buyers, which is good because the cost of the car kept coming down. It's like, who's gonna buy the high-end stuff? Well, Tesla announced their Plaid Model S for $139,900. And what's epic about this is the 520-mile range. And forget about the 0 to 60 in 1.9 seconds. That's pretty cool, but a 520-mile range represents about a 30 to 40% increase in the long-range models that Tesla currently offers. This is absolutely incredible and gives us some insight into how Tesla's actually going to deliver on their promise to have a Cybertruck with a 500-plus mile range. Finally, we got some long-term growth for the company. So the goal is to get to 100 gigawatts by 2022 and 3,000 gigawatts by 2030. Now, I'm going to use these to figure out the company's growth rate, kind of what the company expects to grow at. Because no matter how you slice Tesla, it's an energy company. So growth in energy is growth in profits. Okay, now we've got all the facts. We know what is not or was not announced at Tesla's Battery Day. We know what we got announced at Tesla's Battery Day and some of the important bottom lines that I just reiterated. Now I'm gonna take these bottom lines that we learned and we're going to incorporate them into the stock. So let's go ahead and pull up some sheets here and show you exactly where my head is. So here we go. The first thing that we learned that's really good is in all of their earnings reports at Tesla, we were really expecting to have the factories produce 500,000 vehicles per gigafactory. Well now, plus Fremont, because I guess Fremont's technically not a gigafactory, but anyway. But now, we're actually expecting to see 500K at Fremont, Austin, and Berlin, but up to 1 million in GigaShanghai. This actually gets us to that 2.5 million car target by 2022. It's actually a realistic path without even adding new facilities. Just get these all built by 2021 and go ham in 2022. Not bad, especially since over the past few weeks, every time I've done a Tesla analysis, I mentioned I thought it would be realistic for Tesla to get to 2.5 million vehicles produced and ideally delivered by the end of 2022. This update, that one line, literally just gave us the complete path as to how we can achieve that style of production. Simple. Add 500,000 of production units to GigaShanghai by doing a second phase expansion to the Gigafactory, which makes you wonder, can we also expand Fremont more than 500K? Can we expand Berlin and Austin more than 500K? Obviously, a lot of potential here. We know that Giga Nevada produces Panasonic batteries. We know that the Kato facility is mostly used for research and development. This is where they're testing the new batteries right now. And we know that Giga New York is working on like the solar roof and solar panels. Here's also some of the stuff we know, kind of just thrown together on a chart here, so we have it a little bit more cleanly. We know that in 2019, we had deliveries growth of around 50%. And in 2020, Elon Musk told us he expects to see growth of 30 to 40% despite all of the pandemic slowness. So this should have probably been higher, but we'll take 30 to 40% in the year of a pandemic. This is going to be a big number here because this implies a growth rate to us. if we take a present value of 100 gigawatts, you don't even have to know what that is. I told you this isn't gonna be technical, so just pretend 100 bananas. If we take 100 bananas in 2022, which Tesla thinks they're gonna have 100 gigawatts of power, 100 bananas of power by 2022 produced, and then by 2030, they plan to have 3,000 bananas. That's 30 times, right? 30x. What's the growth rate that we can imply from that? Well, if we do that compounded calculation to figure out a growth rate, we'll see that Tesla thinks they can grow at an average of 53% per year. That's a pretty exponential curve, and you'll see that in just a moment. We know the $25,000 car, 2023, we talked about that. We think it'll be 3 years before they fully realize the success of battery margin. Okay, we'll talk about that. They want to produce up to 20 million cars long term. We talked about the 1 million Shanghai. We know that leases are consistently 4% of sales. Berlin, Austin, end of 2021. We talked about this. Okay, good. So this is kind of just putting our thoughts on a spreadsheet here so we know to incorporate some of these important elements. We also know that Elon Musk spent quite a bit of time talking about how important it is to have factories as close to the consumer as possible. Ideally, you start having smaller factories scattered throughout the world. It'd be better to have one small, highly efficient factory that does the batteries and the production and everything in one place, and then have multiple of those factories in different states, in different countries, and certainly in different continents, so that way they're as close as possible to the consumer to increase the speed at which these products can be produced, but also to minimize on shipping and delivery costs. It's a brilliant model. It's very, very smart. So if we take the growth that Elon Musk told us we should expect, we might see somewhere around 500,000 vehicles produced and delivered in 2020. That's an average of his 30 to 40% growth. Okay. Then, if we remember how I told you on that last slide, we had about an exponential growth rate here of about 53%, right? Well, if we take that number and just go with 50%, this is approximately what we should see delivery production look like. 750,000 vehicles in 2021, 1.1 in 2022. This is a problem though, because remember, I've been estimating 2.5 million by 2022. And then you kind of start seeing this exponential curve to where their goal is 20 million vehicles and they hit 20 million vehicles somewhere around 2029. But this growth won't remain forever because you'll hit economies of scale and you probably won't see this crazy bump to 29 million vehicles. Is at some point you're not going to be growing at 50% forever. You're going to hit scale. And there's also a limit to how many vehicles people want to buy per year. Toyota in 2019 produced and delivered around 10.7 million vehicles. So 20 million is almost twice that. Twice Toyota. Keep that in mind. That's their goal. It's not actually happening right now. We got to keep that in mind too. These are just goals. In 10 years, Nikola could be running the world. Okay, nobody really believes that. But anyway, so this is what this chart looks like. All I did was take that data and throw it on a chart here. This is obviously exponential, which is exciting in one sense because if this is the goal, then that really means when we're investing in Tesla stock, we're investing right here. Which is weird because right now the stock price looks like this, right? The stock price makes it look like this is 2020 and this is, 2014 or whatever. And it feels like we've done this crazy run up in the stock. So it feels like we're already behind the curve in terms of this exponential curve. But based on these projections that Elon Musk is giving us, this vision, we're just at the beginning of the curve, which is kind of interesting and exciting for Tesla. But let's do a little bit more of a realistic chart here. Let's see here. Let's go ahead and zoom into this. So here's what I did. I still think we're going to be much more likely to get to 2.5 million vehicles produced by 2023. Hopefully early 2023, the end of 2022. And so here's the way I played with this growth a little bit. I think because we're going to have 3 to 4 gigafactories growing at the same time, Giga, Austin, Berlin, Shanghai, and then maybe some expansion to Fremont. Heck, maybe they'll even add another one. I think it wouldn't be a surprise if we started seeing more of an 80% growth target in 2021, 2022, and that's going to get us to these 2.5 million vehicles produced much faster by 2023 at the latest. This is later than I had expected though. So I think we'll see greater growth soon, within the next 3 years. We'll have this 80 to maybe 50% growth here. And then in time, come 2025, 6, 7, we'll start seeing growth decline. If we go with 30%, we still end up hitting 20 million vehicles by 2030. This is about roughly what it would take to get to Elon's goal. Not saying this is 100% realistic, but this is a potential path. And then we'll probably decay closer to maybe 10% growth. Sort of depends how much competition there is at that time. But it's very possible we're going to see these big growth rates in this first half of the decade and then slower growth rates in the second half of the decade. That means the curve's going to look a little bit more like this. It's a little less exponential than what we just saw prior, but no matter how you slice it and dice it, no matter how much I manipulate these numbers, based on these ambitious goals, as long as Tesla, and this is the big caveat, as long as Tesla remains a leader, this is possible. If Tesla starts falling behind the competition, then this curve's going to get demolished. So if you are a Tesla investor, you've got to pay attention to the leadership position of Tesla. How long are they going to remain a leader? If they remain a leader, look at where we are. 2020's down here. We are just beginning the curve of Tesla, even though it feels like we're so high in the curve already. Okay, great. So now take a look at this. This is just sort of a comparison that I thought of. It somewhat feels like, and this comparison has been made before, that, Tesla's kind of like Apple, right? But look at Apple's chart between 2015 and January 2020, so before the pandemic here, right? Pandemic's over here. We're just gonna ignore that back little rush there for a moment. To me, Tesla feels like it could potentially be one of these companies that trades very, very kind of slow growth-ish for the next 5 years. And then all of a sudden, once we start realizing, oh my gosh, Tesla's still competitive, Tesla's still growing, that's when we could potentially see the stock realization of that exponential curve. Now, this might come sooner, who knows? We're guessing right here based on the information that we have available. But it's interesting to see. Now, let's go ahead and jump on over to our actual numbers on the spreadsheet. So this is the spreadsheet that we had been using to forecast. I had been using a revenue per vehicle of around $52,000. With the introduction of a $25,000 car, this is going to go down. But it's difficult to know when that car is actually going to hit the roads, even if they begin producing it in 3 years. When are we actually going to start seeing deliveries? So I'm going to stick and maintain by the end of 2022, and now I'm going to revise this a bit to maybe the start of 2023, it would not be unreasonable for us to see 2.5 million vehicles, because I think we'll have that quicker growth curve early. I also think we're still going to hit that $5 billion in energy revenues from solar panels and power walls by 2022, the end, maybe early 2023. If anything, all that happened from Battery Day is these expectations are getting delayed a bit. And that is one of my concerns, is that we're going to have to delay some of these expectations a bit. Which, with new and improved margins, I still stand by my original spreadsheet that it would not be unreasonable by the end of 2022, maybe early 23, that's the only change here, is changing this to early 23, we could potentially see a post-split stock price of close to $900 per share, just based on 2.5 million vehicles delivered. That's it. I mean, that's already really good growth, right? That still works out to a 42% ROI on your money between now and the end of 2022. And if we change that to 3 years, it'll be a little lower because it'll take longer, but that's okay. It'll still be a great number. However, the long run, so this to me is still realistic. Nothing changed really about my chart. I can't really go into this chart and make things a lot better because I had already assumed that we were going to somehow get to 2.5 million vehicles. So, the fact that we now know it's going to come from Shanghai with the doubling of capacity, great. It's just sort of a means to an end. No, I have not changed anything about my 2022 projection. This still means that I'd like to buy this stock for under $350 per share. That's still my expectation. However, let's look at the long run here. And this long run, I just want to warn you, it's speculative, but it basically shows us the potential future if Tesla remains dominant. And that's a big if. Look at this. If someday, let's say by 2030, maybe it's 2035, who knows, by someday, Tesla actually produces 20 million vehicles. and we drop the revenue per car from about 52,000 to 38,000. That's a big decline in revenue per vehicle because of those $25,000 cars. And we keep margin the same. In other words, I say that Elon failed at getting margin to 30%, trying to be conservative here. He also failed to improve his profit margin on energy beyond 20%. That's why I'm keeping the expense ratio at 75 and 80% here. And we assume that the corporate tax rates are 28% by 2030, and no higher taxes in the future. Well, then at a future 40 times earnings multiple in 2030, it would not be unreasonable, first of all, for Tesla to actually have a revenue of over $1 trillion. Just take a look at that really quick before I give you the final stock price here. But look at that. That's from sales, $760 billion in sales alone, $30 billion in leases, $76 billion in servicings, which this 10% ratio for servicings might end up going up the more vehicles are on the road for longer, especially with their recycling battery plants and things like that they're working on. And then I did bump revenue substantially to $200 billion, which is a little lofty, but not terribly unrealistic if they produce the battery technology that they're thinking of. So this is the someday projection here, right? Maybe it's 2030, maybe it's 2035. Anyway, with a 40 times earnings multiplier, it would be reasonable for Tesla post-split to be trading for somewhere around $4,889 by 2030. That is a 10x return, more than 10x return. It's like a 12x return over the next 10 years. Tesla has some incredible potential. As long as they remain dominant, I believe we're early in the Tesla growth curve. That's what Battery Day told me. Battery Day told me that, wait a minute, this company is not even close to being to scale. It's still a nascent tech company. There's so much to go on this exponential curve. It just feels weird because the stock price has gone exponential where Tesla hasn't yet. And that doesn't necessarily mean that the stock price is ahead of Tesla, because realistically, when we start running the numbers, it almost looks cheap. But here's my concern for Tesla. Tesla stock may underperform over the next couple years relative to some other high-flying, high-hype stocks. The reason for that is the stock market is too impatient to think 10 years out. The stock market is looking 18 months ahead. And in 18 months, it's like, okay, what? So you just finished Berlin and Austin? Cool. Where are the 2.5 million cars? You don't have 2.5 million cars. Okay, not interested. That's the extent of the stock market. So if you're buying Tesla and you're like, oh crap, I'm down, man. I'm red today. Man, I'm not feeling this. If you don't feel this vision and the inspiration and the potential for Tesla to remain number one while innovating the way they are, do not buy Tesla stock. If you see the vision and you will track Tesla to ensure that it remains dominant over this next decade, then you know we are early in the exponential curve, not late the way the stock actually looks. But my concern is it's going to take some really thick skin to get through the next few years of volatility, because it's not going to be smooth sailing. It's not like I can just go in and lock up 2021 option contracts YOLO for $1,000 and say, oh, this is gonna double or triple my money. No, it might, but no guarantees. It's gonna be this decade. This decade is going to be the decade of Tesla. And I'm saying this at the end ish of 2020. And I hope in 10 years, knock on wood, I'm still alive and I haven't used my life insurance and I'm still here making YouTube videos. I want to come back to this video and see how dominant. How long did Tesla remain dominant? When did they fall out of favor? Or are they even more favor than they've ever been before? And was it true? Were we buying Tesla at what felt like the top of the exponential curve, but we were really just at the beginning? Thanks so much for watching. If you've enjoyed this, please consider sharing and subscribing. Also, consider checking out the programs I have linked down below on real estate investing, stock investing, and of course, making YouTube videos and making money from those videos. Thank you so much, and we'll see you next time.